So, don't let anybody tell you that no one could predict this, no one saw this coming. The FBI, in September 2004, picked up by major chunks of the media, general and trade press, said, first, there's an epidemic of mortgage fraud. That was their word, epidemic. And second, they predicted it would cause a financial crisis. Crisis being their word. September 2004, 7.5 years ago. Right? And then in 2006, early in 2006, the trade association of the people making these terrible loans has an anti-fraud group called MARI. And MARI issues the following warnings. First, these loans called stated income, because you just state the income and nobody checks, are, and I'm quoting, an open invitation to fraudsters. Second, the incidence of fraud. How common is fraud in these loans? Is 90%. 90. They're virtually all fraudulent. Third, these loans deserve the phrase that the industry itself uses behind closed doors to describe them. They are liars' loans. Fourth, the industry seems to have forgotten that these loans used to exist back in the 1990-1991 period that I was talking about, and they caused millions, hundreds of millions of dollars of losses. Why would we do this again to ourselves? And fifth, the banking regulatory agencies are warning every chance they get against making these loans. So no, the industry wasn't forced to do this by the government. It's quite the opposite. The government actually warned them against it. But overwhelmingly, these were being done by non-federally regulated entities, like mortgage banks in particular. But one agency did have the statutory authority to deal with the non-federally insured lenders who were driving this crisis through their fraud. And that agency was the Federal Reserve. And it had that authority since 1994 with the passage of the Home Ownership and Equity Protection Act, HOEPA. Alan Greenspan and then Ben Bernanke, despite these warnings from the FBI, despite these warnings even from the industry's own anti-fraud experts, despite pleas from all kinds of lefty-ish groups, including, by the way, Acorn, which tried repeatedly to get the Federal Reserve to crack down against these loans, the Federal Reserve absolutely refused to use that authority until July 14th, 2008, which is about a year after the loans had disappeared. So, after the horses were out, the barn had burned down, and everything had been raised on the farm, they came out and put padlocks on the ground. It was incredibly insane. Why does it occur? Because both Greenspan and Bernanke, when it comes to fraud, are in the grips of this theoclassical dogma that says government's the enemy, the private sector is the solution. They would never make fraudulent loans because you'd lose money. Well, no, you don't lose money as the officer. The bank loses money. You get rich. So not only was nothing effective done, but things didn't just stay the same. By 2006, half of all the loans called subprime, that means that they have known credit defects in their history.
Is that the same thing as a liar's loan, or is it different?
No, well, that's where I'm just going.
Okay, good.
Even today, many people say, well, there's subprime, and then there's liar's loans, and then there are prime loans. But in fact, by 2006, half of all the loans called subprime were also liar's loans. So those are not exclusive categories. You can, and you were typically, by 2006, you were both of those things. By 2006, at least 1/3 of all the loans made in that year were liar's loans. That's well over 2 million loans with 90% fraud rate.
Amazing.
So the bubble was hyperinflated because of this surge of fraudulent lending. And they didn't just run the frauds by lying about the borrower's income, they also inflated the appraisals. So your listeners, step back for 15 seconds and ask yourself this question. Why would an honest lender ever inflate the appraisal? The borrower can't inflate the appraisal. There's no reason why an honest lender would ever inflate an appraisal. The appraisal is your great protection against loss. So this is a superb marker of the presence of fraud. The then Attorney General of New York, Anthony Cuomo, ran an investigation of Washington Mutual and found that Washington Mutual had a blacklist of appraisers. But you got on the blacklist if you were honest and refused to inflate the appraisal. So again, we ask, this is the type of thing that a jury can understand in 10 to 15 seconds. Oh yeah, that makes no sense for an honest entity. Why are there no prosecutions? Why does Obama keep emphasizing that things weren't necessarily illegal? Well, of course, things weren't always illegal. That doesn't mean you don't prosecute where they were illegal. What is going on? Financial institution prosecutions are down from peak by more than half over the last 20 years. The Bush administration, George W. Bush, had a terrible record. The Obama administration is slightly worse in terms of these prosecutions. Under Attorney General Mukasey, who was Bush's last Attorney General, he refused even to create a national task force against the mortgage fraud that was destroying our nation's economy, saying that mortgage fraud is simply the equivalent of, I'm quoting him, white-collar street crime.
Wow.
So I told you that we obtained in elite cases over 1,000 felony convictions. To do that, at peak, we had 1,000 FBI agents. The savings and loan crisis cost $150 billion. This crisis, just in the household sector, $11 trillion. This crisis is at least 70 times larger than the savings and loan crisis. And the role of fraud, given the 2 million cases that I talked about, over 2 million just in 2006, is concomitantly larger as well. As recently as fiscal year 2007, we had 120 FBI agents assigned to all cases of mortgage fraud in the United States. And they did the tiny cases. They didn't investigate a single large fraudulent lender because of Mukasey's refusal to look at them. Well, what happens if your most elite institutions, A, engage in massive fraud, B, the CEOs and other senior officers get incredibly wealthy by doing it, D, they're bailed out, and E, they're never prosecuted?
Exactly.
Then crime pays. It pays enormously. It is the primary route to wealth among financial institution executives at our elite institutions. Does this mean all bankers and all banks and all bankers? Of course not. But at our largest institutions, that's primarily how they prosper. And this conference in Italy is a good reminder of that, as is going back a little bit in time to the United States. Because everybody remembers, who's old enough, the Enron crisis, and most of us are old enough. What people probably don't remember is that Enron's insider frauds were only possible because the largest banks in the world eagerly aided and abetted those frauds. And there's a wonderful factual record because of the bankruptcy investigation that shows that the big banks knew they were aiding frauds. Not a single one of the banks was prosecuted for that. There is fabulous testimony in front of the Financial Crisis Inquiry Commission. That was the National Commission to investigate the causes of the savings and loan crisis. It's all available free online to your listeners, should they go. And it showed that the head of supervision from the Federal Reserve was so disturbed by the fact that the largest banks eagerly aided this fraud that he keyed up a special briefing for the Federal Reserve Board. So this is the presidential appointees that run that agency. And he reports that they were enraged at him and the supervisors for doing so, not at the banks for their frauds. Flash forward to Italy. Parmalat, a huge milk and food company, but one of the bigger firms in the world. Massive fraud. Again, what we in criminology call a control fraud, which is simply where the people that control a seemingly legitimate entity use it as a weapon for fraud.
Let me interrupt you for a second. I was going to ask you about control fraud, and is that the same thing as accounting control fraud, or is that different?
Well, the weapon of choice in finance is accounting, and that was Parmalat's weapon as well. And that was Enron's weapon, and that was the savings loan crisis and the current crisis. But let me take 45 seconds and say, well, I have been talking overwhelmingly about the financial crisis. There are many different kinds of control fraud, and many of them maim and kill. So to give just one example, China has had a problem with counterfeit infant formula for years. So they introduced a governmental test to try to detect these counterfeits. And that test searched the compound for protein levels to make sure there was actual protein. Right? Turns out it's cheaper to make infant formula with no milk, water, and essentially chalk. But now to spoof the protein test, they added melamine.
That's right.
So you now had a product designed for infants who need nutrition more than any humans, that had zero nutritional value and had a contaminant that caused kidney stones in kids as young as 3 months old. At least 6 kids were killed. 300,000 were hospitalized.
Wow.
And every honest manufacturer of infant formula was driven out of the marketplace. Because if cheaters prosper, you can't compete with them, which again is why you need honesty, which is why you need government. You need the regulators functioning as the regulatory cops on the beat, because there are no police that function against white-collar crime. So you're correct. Accounting was the weapon of choice. It was the variety of control fraud that Parmalat used. But there are many other forms. The ones that have been in the news recently have been frauds against employees. The Apple suppliers and such. There's been some publicity. I've written a number of things about this. There are environmental frauds where you certify that the timber is a new harvestable stuff, but it's really old growth forests that you're destroying. Those are illegal and fraudulent things that are done by seemingly legitimate companies as well.
You're listening to lawyer, academic, author, and former bank regulator William K. Black. Today's show, The Greatest Bank Robbery Ever. I'm Bonnie Faulkner. This is Guns and Butter.